Let's continue with reaction following the just released data from Stats SA, which shows that GDP rose by 1.2%, with agriculture contributing the most, just over 12% to that growth. We're now joined by Mpho Molopyane, Rand Merchant Bank economist. Thank you very much, ma'am, for availing yourself this afternoon. So the statistician, the Auditor General, rather, Riseka Maluleka, going through great pains to say that we're not out of the woods yet in terms of the effects of COVID-19. I beg your pardon, he is the Statistician General.
Yes, yeah. I mean, you're absolutely right. So despite the strong recovery that we saw in 2021 growth, the economy still remains well below pre-pandemic levels. And, you know, our expectations, unfortunately, before the Russia-Ukraine conflict, our expectation was that the economy is going to get back to pre-COVID levels by the third quarter of this year. But obviously, the conflict in Russia and Ukraine definitely dampens those expectations. But overall, I think it is quite an impressive recovery, much stronger than what most of us had expected.
We also saw that household consumption has grown, food and non-alcoholic beverages. What does this tell us about us South Africans?
Yeah, I mean, I think if we just recall back to the third quarter, right, that we saw the contraction in third quarter activity, and that was really the back of the July riots, and with some of the supermarkets closing, and hence consumers couldn't get those goods and services. But you know, once most retailers started reopening, we then saw that pickup in activity and hence the increase in consumption. But of course, I mean, given that it's it's an increase in basic goods that we're seeing from consumers, it's already beginning to show that the consumer outlook is likely constrained. On the other hand, it does also show that the grants that government re-implemented following those July riots are definitely helping most households, you know, those lost incomes during the hard lockdown. So it does paint, you know, quite a concerning picture for households, especially when we think the outlook and the, you know, poor recovery that we've seen in the labor market.
Let's take a look, rather, at some of the drivers or contributors to the growth. Agriculture contributing the most, but finance is the biggest industry in the country. So how is it that we can see one of the largest contributors to growth, but not the biggest?
Yeah, so I think what likely happened there in the finance sector, I think that must have been driven by, because if you also look at your mining sector, so I think 5 of the 5 sectors of GDP contracted, one being mining, I mean one being the finance sector which you're talking about, but also mining, electricity, also contracted, and I think that contraction in activity in those sectors, as well as the contraction in the construction sector, may have then affected activity in the finance sector also.
Let's just expand on the mining sector that you bring up. It brought in a lot of money into the country, even during the pandemic. How do we make sense of the 3.1% slump?
I mean, that's really the back of, so if we think back again to the third quarter results, miners were already complaining about the supply bottlenecks, particularly on the Transnet rail. So, you know, they were quite excited and happy about the high commodity prices, but unfortunately, because they couldn't, you know, export as much as they wanted, they ended up sitting with huge stockpiles, which they then had to stop producing, essentially, because the stockpile levels were just enormous. And I think that's at the back. That's why we're seeing a further contraction in mining activity in the fourth quarter. It's really the fact that, you know, miners are likely sitting with huge stockpiles.
Just maybe finally for us, why does all of this matter in the bigger scheme of things?
It matters because it has a significant impact on South African consumers. It also has quite a significant impact on the fiscus, So the Minister of Finance presented a budget last week where they're expecting debt to GDP to stabilize. And that's only going to be made possible by quite a strong rebound and continued strong economic growth. If, growth doesn't continue to grow at strong levels, then we are likely going to see debt stabilize, which will be negative for the fiscus because it means the Treasury will have to allocate a greater share of the expenditure towards servicing debt instead of at least supporting households further. And for the household, it means that if the economy is not growing, then the recovery in the labor market is going to remain quite poor. So the print today is quite encouraging, I must admit, because it points to that there was less destruction to output during the COVID pandemic, and that the continued recovery, we will be well on our way to recover to pre-pandemic levels soon.